This is the Asia Trade. I'm Shery in Tokyo.
I'm Haidi Stroud-Watts in Sydney. The top stories this hour. Asia markets get a mixed lead-in from Wall Street as investors await key central bank decisions. Big tech gaining while small caps slip, with the rotation trade hitting pause. Japanese earnings also in focus. Nomura likely to see profit more than double, and ANA set to give its outlook for travel demand. Plus, Venezuelan bonds sell off as street protests break out over the contested presidential election victory for Nicolas Maduro.
Geopolitical risk, not to mention earnings, something to keep an eye on for the markets, Heidi, but of course is all about monetary policy. Whether we're expecting actual action from central banks, say the Bank of England could cut rates for the first time since the pandemic, or the Fed signaling future rate cuts potentially in September. Here in Japan, not a lot expected in terms of the rate, but perhaps it's really those debt purchase reductions what we should be concentrating on this week.
Yeah, it really is that sort of expectation, and also how we see the flow-on effect on the yen and as well as the dollar, right? The sort of twin decisions from the Fed and the BOJ really key for currency markets. We're also watching China as always. We're hearing that Beijing is going to stop publishing daily global stock flows in mid-August, and this comes as, of course, we see just sort of the doldrums that have really been afflicting the Chinese equity markets, right? And certainly this is not something that will be seen as particularly supportive when it comes to sentiment. Another step towards just obscuring information about overseas funds that are going in and out of the Chinese stock market. That cessation of daily flows data will take place in the middle of August. We did hear about the hints that they might do that back in April, but that's been sort of made explicit in that Friday session. In May, we had the end of data on intraday flows as well through the trading links with Hong Kong. So the calculation of net flows will be a lot more difficult by the end of each trading day from August 18th, Shery.
Really something to keep an eye on, given that the Chinese stock markets have been trading sideways all year, right? Take a look at A50 futures finishing the session down 0.3%, while the Chinese yuan is holding steady at that 727 level. But it's really all about the Japanese yen, isn't it? Because those yen shorts could really take a beating if we do see a hawkish pivot coming from the Bank of Japan. According to the Bank of America now, a potential 145 per dollar if we do see that pivot coming from the central bank. Nikkei futures unchanged at the moment after we saw the first gains of the session in 9 sessions for the Nikkei. Sydney futures downside 0.7%. Do watch out for those commodity-related stock markets and sectors, given that we saw oil fall to that 7-week low. Take a look at that other board, and you can see how WTI is coming online in the Asian session. Of course, we had U.S. stocks gaining ground in the New York session after that rotation that saw it under pressure, but it's really about the earnings season. We have Microsoft reporting on Tuesday and just a slew of other big tech names coming out this week. So we're very much watching that. And of course, the FOMC, Heidi.
Let's get some views, Shery, from Junbei Liu, who's a portfolio manager at Tribeca Investment Partners. Always great to see you, Junbei. Do you believe in the rotation trade story?
Look, I certainly believe in the rotation story, but look, no rotation is going to continue for a long period of time without testing some limits. Now, right now, it's taking a pause because market is a little bit cautious ahead of the, the central bank decisions and some of the inflation data that's coming through. So, but I do think that this rotation trade is going to continue over the next 12 months, simply because some of the cyclical sector part of the market is now, looking very, very valuable, very cheap, and should interest rate get cut, and we know it well, this part of the market will have quite meaningful earnings upsides over the next 12 months. So so I do see that taking place, and as the investor, of course, also banking in some profit that they have made from the larger tech names.
Yeah, because you are interested in tech, but valuations still after the sell-off are too expensive.
Yeah, look, the valuation is still very high, particularly relative performance over this calendar year, still significantly higher than those sectors. So we will sit back and wait. But I do think that tech, you always have some tech companies in the portfolio, particularly with this AI transition, this AI boom that is taking place. So anytime that they have a meaningful pullback, certainly should pick up some and put in the portfolio.
One of the sectors that you're watching is resources for Australia, right? And there's lots of concern as to, if we continue to see China in the doldrums, the recovery across the property sector being a very slow one. Does that have a meaningful impact? Because we have seen the metals and commodity side come off somewhat.
Look, absolutely. So, we do think that the commodity side, particularly important for Australia, given it's a big part of the index, they do look quite attractive on valuation. China, it's recovering slowly, but it is recovering. It's just taking longer, and of course, it didn't give the big bang stimulus that everyone's expecting. But slowly, we're seeing things improving somewhat, and some of the commodities, say the bulk and the like, is holding up okay. Copper is come off somewhat, but if the global economy is at the tipping point of gradually finding bottom and recovering with the interest rate cut, I do think that these commodities will recover, and then commodity equities, the resource companies is looking very attractive at the moment.
Junbei, is it all about China for Australia's markets? Because, of course, we do have the CPI print coming up and a potential rate hike coming from the RBA.
Yeah, look, actually, it's more about domestic economy at this point. China will be important for the resource company, but at this point, everyone's watching the inflation data here in Australia because, interestingly, Australian economy seems to be having a bit of a delayed effect in terms of inflation and is still heading higher. If we have another month of very strong CPI of above, if you're tracking above 4, then we certainly see a lot of pressure to be put on the RBA next week to put up interest rates. And now that's going to really decouple from the rest of the world where the interest rate is getting cut, and it will put Australia economy in a very, very tough position because we know the consumers already been in recession for quite some time, and however, service inflation is running high, but even though it's slowing, but it's still not to the comfortable extent. So with the rate rise, it's going to put a lot of pressure on the economy, and if for the next 6 months, we do think there's a lot more downside for those cyclical sectors here in Australia if the rate gets increased and if the inflation number is bad this read.
We're very much preparing for a rate hike also coming from the BOJ eventually this year. What would that mean for the markets? Could it be a dampener as it is in Australia, as you say, for the cyclical sectors in the Japanese market as well?
I think the Japanese market at this point, certainly seems that what the central bank is trying to do is not really having desired effect. I think for the Japanese equity market, there is actually quite a lot of strong fundamental under the hood in the smaller and mid-cap space, but just on the on the big index level, it will be a little bit dependent on what's happening with China because Japanese market has done incredibly well last in 2023. And then has been very defensive. So should there be any flow back into the Chinese market, given the performance is now catching up, we do think that market might underperform relatively.
You're one of the most assured investors when it comes to China that we know and that we speak of. Do these developments, when it comes to the retreat from disclosure and data, are they a game changer for you? Do you think it kind of is heralding a direction that's not going to be supportive?
Look, I think the Chinese market certainly is another sign that things are getting a little bit harder. I think transparency is always what foreign investors always look for. I do think the Chinese is sending a little bit mixed, conflicting sort of messages. At one point, in some sectors, financial sector and the like, they like to open up and welcome, flows and the like, and whereas other sectors like data and security is increasingly difficult. So I think it's, China, very important thing is for them to recover in terms of the economy. And then, if the foreign capital is actually incredibly important to that economy. The latest meetings that came out where they talk about their unicorn, why hasn't there been, enough unicorn to come through? That's the, company reaching $1 billion. But foreign capital is actually a big important factor for those unicorn to come through. So, it is quite a lot of challenges for that economy to work through. But my view is that its growth is coming scaling back. It's just taking a bit longer. Once that comes through, and then the government will have, follow-on policies to really help to open the economy.
Junbei, always great to have you with us. Junbei Liu, who's a portfolio manager at Tribeca Investment Partners. Coming up on the Asia trade, Australia is in focus. Deutsche Bank will be with us ahead of that CPI print, said to be a crucial one for shaping the RBA's rate path. We'll also be getting the global market outlook with BNY Mellon and CreditSights as traders keep an eye on central banks and tech earnings. Shery.
And Haidi, of course, we continue to watch as well the protests ongoing across Venezuela at this point. You're looking at live pictures of Caracas at the moment, as we've heard from the opposition leader Marina Corina Machado about really calling for nationwide opposition meetings on the local level after the Electoral Council certified Nicolás Maduro as a president-elect. Of course, this election has been highly questioned by the international community. We'll continue to watch those demonstrations across the country throughout the hour. This is Bloomberg. Venezuelans are taking to the streets of the capital in protest after President Nicolás Maduro claimed victory in the elections. Maduro is also facing calls from the U.S. and several Latin American countries for a full accounting of the vote. Bloomberg's Latin America executive editor Creighton Harrison joins us now live from Caracas. Creighton, it's really great to get you from the ground. Tell us a little bit about how these protests right now are different from what we've already seen from the country in the past.
Yeah, I mean, Shery, as you know, this is a country that's experienced a share of protests over the years under the Chavista regime, certainly, and before. What feels a little bit different today is that a lot of the protesters are coming from neighborhoods that you might consider traditional strongholds of Chavismo, of the socialist movement of the last 25 years. These are lower income neighborhoods, so a lot of people marching or riding motorcycles toward downtown and shouting slogans of freedom. So this is a little bit different. These are people who you would consider to be normally loyalists to the regime, in part because they receive a lot of benefits directly from the government, and that's kept them loyal for a long stretch of time. But as the economy has begun to fail, then we've seen we talked to a lot of voters who ended up turning toward the opposition this time around, and some people are angry at what they saw as a fraudulent election.
Domestic pressure, but also a great deal of international pressure as well, right? What does this potential presidency next term look like if there's not going to be international recognition? How much worse can sanctions get, for example?
Yeah, in a lot of ways, it could look pretty similar to how it has looked, which we know the sanctions have not been helpful to the Venezuelan economy. It's really crippled this country for a long time and sent a lot of people leaving Venezuela for other parts of Latin America and indeed for the U.S. And there's already a pretty significant regime of sanctions in place, including on oil, most prominently. There have been a lot of exceptions carved out from that oil sanction over the years, so that's one lever that the U.S. could use if it wants to turn some of those back. The U.S. has some incentives to keep kind of a looser set of sanctions in place and to allow some oil to be produced in Venezuela, in part, to just get more oil on the market and keep prices in check, and in part to not plunge Venezuela back into the kind of economic depths that it was a few years ago, which of course created a lot of the diaspora of Venezuelan migrants you see throughout the region now.
Not surprising we're getting that sell-off in Venezuelan bonds again.
Yeah, there was a little bit of optimism creeping in among investors that perhaps we would see more of a pivot this election, that perhaps the regime was ready to let go. What we've certainly seen the last 48 hours is that is not the case. So that's one thing you're probably seeing reflected in the bond price right now. And the other is just, the idea that the government would somehow be legitimized in the international community looks like less and less of a possibility with the result they're claiming right now.
Our Latin America Executive Editor Creighton Harrison there in Caracas will continue to bring you the latest as all of this unfolds, and you can also get the latest on the Bloomberg. For more on this, TLIV Go is your function for that commentary and analysis from Bloomberg's expert editors. We're staying with geopolitics, and Prime Minister Benjamin Netanyahu of Israel says that the country will respond harshly to the attack in Golan, which killed 12 civilians, as the US urges calm to prevent a full-blown war in the Middle East. Bloomberg's Michael Heath has been tracking these developments, which, are really building up the risks of a regionalised conflict now. Israel kind of weighing its options at this point?
Yeah, that's what it seems like, Heidi. I mean, they need to respond because that's just the nature of the region, that you can't allow any show of weakness, even if you'd like to forge a truce perhaps with Hamas, or not to see things spiral out of control. It must be tit for tat. So they have to respond. What's being debated is the extent, and Israeli officials are saying they intend to hit hard but targeted. They're aware, the US has made them, and Europe as well, has made it clear that they're very, very worried about this spiralling out of control. So they've just got to find that balance of making their point without this spiralling out of hand. So some of the discussion is that perhaps they'll hit infrastructure, weapons caches, they might target commanders. It's just there to be seen, but there is worry about what this will mean. Obviously, we've seen some international airlines suspend services to Beirut, the capital of Lebanon, and there's also been local reports that Hezbollah is moving precision missiles into place to be able to respond to Israel. So the question really is, how hard does Israel go, and then what does Hezbollah do about it? Because if we end up in a severe tit-for-tat, then we have every possibility of spiralling into a regional war.
What does the domestic politics look like for Netanyahu at the moment? Because we've seen, obviously, the pressure from the far right, and now these protests over the arrest of these soldiers that have been accused of mistreating a Palestinian detainee. Yeah,
I mean, Israel has this prison that where some of the people who are or the militants who are involved in the October 7th attacks have been held. And there have been reports, and this has been a long period where there's been challenges in the Supreme Court over human rights abuses there, and there's the government or the judicial authorities have finally taken some action there, and that's triggered the far right, extraordinary scenes where they're trying to raid these military detention facilities to release these soldiers. This often happens. I mean, Israel's always had a very loud and fractious sort of far right. The difference now is they're in government. And so you have the interior minister saying hands off our reservists and stuff like that. It's almost like a member of the government accusing the government of doing the wrong thing. So really quite extraordinary scenes. And Netanyahu he's sort of trying to steer a middle line, but by nature he's a nationalist, but he's also a political survivor, and he needs these people on his side. So he's always going to be relatively sympathetic towards them. On the other hand, you've got, further demand coming for the release of the hostages from the families there. They're really starting to intensify pressure on the government to get these hostages out.
And the direction, of course, of Middle East politics also could be very much shaped by what happens in U.S. politics. Before we let you go, we're hearing from intelligence officials in the U.S. that we are already seeing some potential foreign meddling ahead of that vote.
Yes, that's right. Bloomberg's reporting with US intelligence officials that Iran, Russia and China are trying to sort of do what they can to sway the vote. Now, Russia obviously has a history here. It was accused quite strongly when President Trump first won an election in 2016, and it was accused of doing similar in 2020. Russia has a lot of history of doing this. It does a lot of work in Europe, particularly with far-right parties. But in this case, because we've got Trump and everything that goes on around him, we've had President Biden withdraw from the race. There's a lot of effort to try to sort of discredit the entire, democratic process as well. And this is only going to intensify. I mean, these countries have nothing to lose in trying to stoke conspiracy theories, deep fakes, all these sorts of things. Again, Russia in particular specialises in this, so I think we'll see more of this ahead.
Bloomberg's Michael Heath there with the latest on all of those geopolitical stories that we're tracking at the moment, as we also continue to watch Chinese President Xi Jinping stepping up efforts to position himself as a peacemaker for ending Russia's war in Ukraine. That's despite the U.S. and Europe accusing Beijing of propping up the Kremlin's battlefield efforts. For more, our China correspondent Mimin Lo joins us now in Hong Kong. Mimin, so tell us a little bit more about these efforts by Beijing when it comes to its diplomatic front.
Yeah, certainly the U.S. elections is driving a lot of diplomatic activity in this region. You heard just now the U.S. officials, intelligence officials saying that these countries are trying to meddle in the U.S. elections. They also said that China is trying to sow discord with social media by trying to portray democracies as being very messy and chaotic, although they said China is not trying to sway the elections in any way. Meanwhile, in China, we know China had hosted the foreign minister of Ukraine last week and concluded that the conditions are not yet ripe for peace talks. They have now followed up very quickly by sending its peace envoy Li Hui to countries like South Africa, Indonesia, Brazil to try to create those conditions for the resumption of talks. And interesting that these are the countries that had skipped on imposing those US-led sanctions on Russia. And this is interesting because remember that first peace conference held in Switzerland where Russia was not invited to, President Xi had skipped on that because he said that both Ukraine and Russia must be present in any peace conference that is effective. And he's been calling for an alternative peace conference. And this diplomatic flurry, if you will, looks set to lay the groundwork for a potential peace conference that Beijing may host maybe ahead of the U.S. election. Kyiv has said that they are open to attending such a thing. And it would certainly be a diplomatic win for Beijing if they can portray themselves as this alternative force for peace, an alternative to the U.S. as well.
Speaking of a diplomatic flurry, we've seen Italian Prime Minister Giorgia Meloni meeting with President Xi Jinping. It's very interesting, this sort of idea that perhaps Italy can be the broker of peace and cooperation between China and the EU.
Yeah, she's really trying to achieve quite a number of things here. She wants to reset relations with China after pulling out of the Belt and Road Initiative, which is quite tricky after she mentioned that there was a serious mistake for Italy. And now she wants to offer to broker better trade relations with the EU after Italy had supported those EV tariffs on China as well. And it's not clear how much sway Meloni actually has over the European Commission, given that she has been, left out of closed-door negotiations for the union's top job. She has kind of been sidelined after the European parliamentary elections in June. But still, President Xi has said he is hopeful that Italy will provide a non-discriminatory environment for Chinese firms. And Meloni has also called on President Xi to create a more balanced trade relations. And this comes as Italy and China still has about $80 billion in annual trade that is tilted heavily in Beijing's favor. And Meloni also raised those issues of the Ukraine war and Gaza with President Xi as well, really seeing President Xi as an important interlocutor when it comes to managing global tensions, especially in case a Trump presidency, comes to force in November and really upends Washington's relations with Europe.
Bloomberg's China correspondent Min Min Lo there with the latest. More ahead on the Asia trade. This is Bloomberg.
It's day one for the Bank of Japan's meeting this week. Of course, we are expecting that decision to come out very soon. Not a lot of change expected when it comes to the rate, but we're watching the reductions of debt purchases. This is the picture when it comes to the yen's overnight implied volatility, now at the highest in 3 months. The Bank of America thinks that the yen has scope to rally to 145 yen per dollar if the BOJ turns hawkish. This is Bloomberg. We have breaking news out of Japan. We have the jobless rate for the month of June coming in at 2.5%. The estimate was for it to stay still at 2.6%, the same level as the previous month. So we are seeing a little bit of tightening in the labor market in Japan. But when it comes to jobs to applicant ratio, the availability of jobs, it's fallen to 123 jobs available to every 100 applicants. It was at 124 for the longest time. Now we continue to watch, of course, what this means for the Bank of Japan in terms of a tight labor market and what that would mean for wage hikes and prices overall and the inflationary impact that this will have. But right now, for the month of June, we're seeing a little bit of tightening in the labor market with the jobless rate falling to 2.5% for the month of June. Staying in Japan and those inflationary pushes, not to mention, of course, wage hikes that we're watching. Many small small businesses are actually struggling to figure out how to raise prices after decades of deflation. The pressure has prompted some business owners to take classes on negotiating higher prices. Bloomberg senior editor Reed Stevenson has more on today's Big Take. Reed, this is a fascinating story. So we're talking about people actually going to these classes. You took one of them. What was it like?
Yeah, it was really interesting. First of all, it's important to get out of Tokyo sometimes. Tokyo is not Japan. Japan is not Tokyo. There are a lot of businesses across the country. And so I went to this city called Matsue, and it's on the western side of Honshu, the biggest island here. And what I saw there were, just smaller businesses, people from smaller businesses who had never, ever learned how to ask their customers to pay more. And so they were taking class, learning how to make a convincing argument to ask their customers for more money and therefore be able to pay their employees more. And this is sort of the classic, wage price cycle that really we haven't yet seen taking off in Japan because of this long period of, economic stagnation and also just interest rates at rock bottom.
We have continued to talk about how all of these big corporations have given these decade-high wage hikes. But I wonder, as you said, when you go to the countryside, when you go to these smaller companies, how much of that is actually in play for these smaller businesses? Can they raise prices, and can that be translated to, higher wages?
Indeed. I mean, what you're seeing is, the employees of these businesses, which actually make up like 90% of all the companies in Japan, they're seeing higher prices. They're going to the grocery store and they're paying more for daily goods, food, etc. Energy prices are going up. And then these smaller businesses aren't able to raise their salaries. And the reason why is because very often they are at the mercy of even larger companies. And the larger companies, the famous ones, the Sonys, etc., those are the ones that have, pricing power, and they also, many of them happen to be exporters. And so they can benefit from, a weaker yen, etc. But what really needs to happen is, some of this profit needs to try to trickle its way into this broader economy and then find its way into the employees of those small to mid-sized companies. And then you get this sort of classic cycle going. And this is actually the kind of inflation that the BOJ itself is looking for in order to justify, normalizing monetary policy and raising interest rates. And especially right now, as it begins, its two-day policy meeting just 3 months after normalizing monetary policy.
Reed, I'm reading this story, and there's this, translation from the Japanese saying, "Don't let them live, but don't let them die." It's pretty dire, but I do wonder how much does that kind of reflect the codependency that you see between smaller firms and bigger firms in terms of their contracts and negotiation terms, but also between employees and the companies that they work for.
Yeah. I mean, there is still this concept of lifetime employment, right? So the smaller companies do want to take care of their employees. They want to make sure that they're all paid and really watched after. But when you get into a relationship between a very powerful large company and a smaller company, very often, the smaller company is at the mercy of its customer, its big customer. And so this phrase, which you mentioned, it actually started like in feudal Japan, where you sort of keep a smaller business alive enough to be of use to you, but you don't treat them so bad that you actually kill the business. And so this power dynamic, to a certain extent, is what makes it so hard for small to mid-sized businesses to, in fact, ask their customers for more money. And so therefore, they're going into class to try and learn techniques and really learn something that, in fact, many of them really never knew how to do because we've been in such a sort of an extreme situation for like the better part of 3 decades.
Bloomberg senior editor Reed Stevenson on that really fantastic, fascinating story. You can get more on our Big Take Asia podcast on that as well. New episodes dropping every Wednesday. You can catch that on iHeartRadio, Apple Podcasts and Spotify. Some deals news just crossing the Bloomberg. We're hearing that BHP and London is set to buy Philo for a total consideration of, let me just grab the details for you, of about 4.1 billion Canadian dollars. This is a Canadian mining company that is the target, saying saying that it represents a premium of 12.2% to the last closed trading price. Shareholders, they can get 33 Canadian dollars in cash, 2.3578 shares or a combo in London. We're also hearing that BHP will pay London $690 million in cash as part of this deal. We had heard earlier in July that London Mining Corp had approached BHP about making that joint bid for Vale Corp. This is the Canadian copper miner. That's according to our reporting, certainly, and that preliminary discussions had been had. We didn't sort of have an idea of how BHP received that proposal, but clearly that has now gone through. So a lot of this is centering around the Jose Maria project in Argentina. This is a vast copper and gold deposit in the Andes, and that is part of the appeal of that partnership as well, Shery.
Heidi, we'll be watching those commodities-related stocks at the open in Australia, as we've, of course, seen some pressure already in the future space because of oil falling to that 7-week low. You can see Sydney futures down 0.7%, while Nikkei futures also pointing to the downside after rising for the first time in 9 sessions. Of course, it's day 1 of the BOJ meeting this week, but it's also a big day when it comes to Japanese earnings. We have Nomura and ANA set to report later today. Let's get a preview from our breaking news editor, Gareth Allen. Gareth, so Nomura expected to post a big profit jump. What are we expecting?
Yeah, that's right. So we have Nomura reporting, leading the earnings rush today at after the bell at 3 p.m. Looks like it's been a pretty good first quarter. Consensus shows that their profit is set to likely double. That's their net income. It's been assisted by its domestic retail brokerage as well as its wholesale business. We'll also be looking for confirmation about the deal flow. There's been a lot of movement recently with Japanese companies unwinding their cross shareholdings. So Nomura has likely benefited from brokering those deals. Also be looking to the international business. It's always the thorn in Nomura's side. It looks like US has been pretty positive as well in this quarter. So we'll be seeing how that's gone. And of course, Bloomberg terminal users, you can watch this blow by blow because we'll have a live blog running from 3 p.m. as the earnings hit.
We're also watching airlines, right, as well. There's been lots of data certainly showing that airfares are starting to normalise. We've seen a bit more price cuts, even here in Australia. But is that likely to be seen in the profit outlook for ANA?
Yeah, I mean, ANA obviously is going to be a big benefactor of the inbound boom that Japan has been experiencing recently, with tourist numbers hitting record highs, beating even pre-COVID levels recently. The domestic airfare situation is not looking quite so strong, so we're looking to see if there's any impact from the domestic side. And there's also been the jet fuel issue in Japan, where there've been domestic and international airlines have actually had to start cutting flights because they can't get enough fuel. So Japan's economy ministry has been implementing measures to try and alleviate that shortage. So anything that ANA has to say on that will also be very much in view today.
And Gareth, of course, another company that we'll be watching today, Norinchukin Bank. And this is, of course, the agricultural bank here in Japan that took big losses because of bad interest rate bets. Tell us a little bit about what we're expecting to see when it comes to the unwinding of billions of dollars of bonds.
Yeah, I mean, Nochu, as it's known, it's not listed. It's a cooperative, so no stock implications in terms of that. But it has been somewhat of a basket case recently, where it's just last month said it's going to post 1.5 trillion, a whopping 1.5 trillion yen of losses on its bond portfolio, and that's triple what it said just a month earlier that it was going to post. So there's obviously some real problems in there with their portfolio. So they're making all sorts of efforts to try and restructure that and do things to it. Unfortunately, this time around, there's not going to be a press conference, so we won't have an opportunity to speak to the management. But we'll only be looking at the numbers that they announce, which will probably be somewhat limited. So what we can draw from that may not be a huge picture, but certainly, the actual defined numbers will be very interesting to watch. And any comments they might give as to how they're going to try and unwind this mess going forward will be particularly interesting.
Our breaking news editor, Gareth Allen, there. More ahead on the Asia trade. This is Bloomberg. Take a look at how we're trading when it comes to risk assets in this part of the world. We're just about 15 minutes or so from the start of cash trading here in Australia. We are seeing a bit of a softer start here when it comes to ASX futures, about 0.7% lower. Broadly across the region, Asian stocks are looking like we're poised for a weaker open. Of course, a lot of event risk as we get into this 32-hour window of central bank making decisions, including the BOJ, the Bank of England, of course, but also most key, the Fed. Also a lot of key eco data and earnings coming from, including the 4 US mega caps, and a lot of earnings in this part of the world as well, particularly when it comes to Japan. We're seeing the Aussie dollar holding pretty steady at 65.54. Really, the direction of the Fed will kind of determine where we see the dollar, and in particular, the yen will also have that impact there as well. There's a very crowded Aussie hedge fund trade at the moment that's in particular facing this as a market test. And of course, on top of that, we do have Australian CPI, and that's being very keenly eyed given the growing divergence that we're starting to see between the RBA and the Fed. For some analysis, let's bring in Phil O'Donoghue, who's a Chief Australia Economist at Deutsche Bank. Phil, great to have you with us. And whether or not the Fed actually moves this month or September, is this gap going to persist? And what, I guess, is really the right thing for the RBA to do, given, the twin issues of the fact that perhaps some indications of inflation remain persistent. The labour market is still pretty strong, but household sentiment and, the broader sort of cost of living confidence impact is clearly playing out.
Yeah, look, you're right. The RBA is facing a pretty challenging outlook here in Australia. It tells us that they're negotiating navigating a very narrow path for inflation and activity. The trouble, I think, that the RBA is facing uniquely in the G10 is inflation that is going up. Underlying inflation since December of last year has risen in Australia. Every other G10 economy, it has fallen pretty substantially. We also know that the RBA has lifted interest rates by less than all of our G10 peers. My sense, we're going to get some very important data tomorrow, which I think is going to be really a make or break, but we have the RBA meeting next week, and I'm expecting a hike. I'm expecting a hike, a 25 basis point hike up to 4.6%. As you know, that's not going to do much for consumer sentiment. But I'm worried about the inflation outlook relative to target, and I think the RBA is going to be forced to hike next week.
What happens after that then? I mean, are there sort of distortions that we're seeing in the data at the moment that perhaps doesn't quite line up, or does the RBA really just stick to its mandate, regardless of the fact that we are still seeing, so many jitters across the confidence side of things?
Yeah, look, you're right to point that out. The trouble, I think, is that the RBA only has one target. Only has one instrument, and only has one inflation target, 2 to 3%. When inflation is above target, the choice that the RBA has is either to deliver a little bit of a weaker economy in the short term, or suffer the consequences of inflation that becomes decoupled from that target. And I think, if you try to frame this in a welfare perspective, clearly the better option for the central bank, for any central bank, including Australia's, is to get inflation back to target, because the activity consequences, the welfare consequences of a decoupled inflation expectations that aren't consistent with the target are much worse. We end up with higher unemployment over the long run. So you're right. Politically, this is going to be a very sensitive meeting for the central bank. But we know that, we have an independent central bank. They've been clear in their hawkish statements that we've had most recently from the RBA, that conscious of upside risks to inflation. As noted, I think we're going to get key data tomorrow. If that shows that those upside risks have manifested, have been realised, I think we're going to see a hike. And frankly, I think that would be the right decision for the RBA to take.
We saw the first major cabinet reshuffle by the Albanese government since he took office. What are you expecting in terms of economic policy, perhaps, or the continuation of some of those policies that could help the economy?
Yeah, look, I'm not seeing much of a change in the economic, the fiscal outlook from these recent political changes. It doesn't really hit the economic or the finance portfolio here in Australia. There are a couple of things to focus on, though. Starting on July 1, our new fiscal year here in Australia, on my estimates, we've got about 50 billion Australian dollars. That's about 1% of GDP in additional stimulus relative to last year. At the federal level, we had stage 3 tax cuts. Every worker in Australia will get a pretty significant tax cut starting on July 1 of this year. But also our state governments here in Australia, which do a lot of the infrastructure spending. This kind of doesn't really sort of hit the focus is very much on the fiscal position is on the federal government, but the state governments are responsible for all the infrastructure spending, investment spending. And they're doing a lot, particularly in the big eastern seaboard states of Australia, New South Wales, Victoria and Queensland. So if I add together the state government spending and the federal government spending, we're getting the government public spending adding to aggregate demand right at the time when inflation, as noted before, is sitting above target. So I think the RBA has some role to at least temporarily suspend some of that stimulus that's hitting the economy. That will help them get inflation ultimately back to target. And eventually next year we can look forward to rate cuts. But I think between now and then we're going to unfortunately have to see a rate hike.
Yeah, S&P was putting Australian states' debt topping 600 billion Aussie dollars by later this year. How much of a problem is this debt issue for these states?
Yeah, look, it's not a problem. You're entirely right to point out that it has risen. Victoria in particular, about 30% of gross state product in net debt. That is a lot higher than other states, but it is certainly not unprecedented. We had similar levels of state government debt back in the early 1990s. And unlike that early 1990s episode, our state governments, as big as they are in Australia, are a lot more plain vanilla. So, as state governments, as I noted, they run infrastructure spending, they perform the functions of health, of justice, so, police and nurses, and education as well. So it is very difficult when you're running those sorts of functions to blow up a state government. So I'm not particularly worried about those levels of state government debt. There is an issue around who are the ultimate buyers. We've been able to rely on the big Australian banks to absorb a lot of that state government paper. My sense is we're going to start to see that, the marginal buyer is probably going to move back offshore. But I'm not concerned from a stability perspective. There are good reasons that we've seen this increase in debt. But certainly we're going to see, I think, a shift in the investor base. And that's going to be something interesting to watch over the next couple of years.
Bill O'Donoghue, who's the Chief Australia Economist at Deutsche Bank. Really great to have you with us. More ahead on the Asia trade. This is Bloomberg.
There is a lot of new stuff to build. And I think even if the progress on the foundation models kind of stopped now, which I don't think it will, I think we'd have like 5 years of product innovation for the industry to basically figure out how to most effectively use all the stuff that's gotten built so far. But I actually just think the kind of foundation models and the progress on the fundamental research is accelerating. So that it's a pretty wild time.
Meta CEO Mark Zuckerberg there in conversation on the AI boom. In fact, his company has also doubled down on its AI ambitions as it starts rolling out an AI studio for Instagram users in the U.S. For more, let's bring in Bloomberg technology reporter Mark Gurman. Mark, so what's this AI studio supposed to do?
So this AI studio will allow Instagram users to create their own chatbots that are available on their Instagram profiles for other people to use. Now, these chatbots will use deep learning and artificial intelligence to understand how you may communicate. So, for example, a celebrity could create a chatbot that is able to respond to a fan in a way that the celebrity would actually respond to that person, actually how they would text, actually how they would communicate. So really representing yourself on your profile, letting people communicate with you without actually you doing any of that communication. So you could understand how that would be useful for brands, for journalists, for TV personalities, for celebrities, for musicians. Businesses is obviously going to be the big point there as well. So this is an interesting use case for AI, and and like you said, Mark Zuckerberg and Meta are really pushing fast and forward and going really all in, not on the metaverse, but on artificial intelligence.
Great use case for just any introvert, really, right, if you don't want to actually engage. Mark, obviously AI is front and centre for a lot of these business cases going forward, and Apple is really relying on it to sell its new phones, right? Are we seeing a bit of a delay or a bit of a hitch in these plans?
So Apple Intelligence is now going to roll out to consumers beginning in October. Now, this is going to be a staggered release. There's a new beta that came out for developers, so not consumers, but software developers who want to test features early. I've been playing with some of the features. They're kind of finicky. There are some user interface problems. There's really not a ton available yet, right? The good stuff, ChatGPT integration, image generation, creating your own emojis, that's not going to come until later. A revamped version of Shery functionality, that's not going to come until next year. You're getting a little taste of it. One cool feature that I've noticed is when you get an incoming email, the notification, it will no longer show the first 2 lines of that email. It'll show you a 1-sentence summary of what that email is about. So a little bit of time savers there. Another cool one, in-call recording. So you can record your phone calls in the phone app itself on the iPhone. And then not only will it make you a transcription of that phone call between you and all the other parties on that call, but it'll even give you a 1-paragraph summary of everything that happened during the call. So a little bit of time savers across the user interface there, with a lot more to come, just not as soon as many had anticipated.
Bloomberg technology reporter Mark Gurman there with the latest. We are counting down, of course, a few minutes away from the start of trading in Sydney, Seoul and Tokyo next. Really watching the yen. Of course, huge scrutiny on Governor Ueda about the pace of QT as well as that potential rate hike.
This is the Asia Trade. We're counting down to Asia's major market opens on a busy day, Haidi, of earnings results, not to mention, of course, the countdown to big central bank decisions here in Japan and the U.S. as well.
That's right, that 32 hours of power, right, when it comes to what could make or break a number of key trades, including where the yen goes from here, where the dollar goes from here, and all of the kind of potential collateral damage if markets are surprised, Shery.
We're watching whether it's real action coming from potentially the Bank of England with a cut for the first time since the pandemic. Not a lot of change in interest rates here in Japan or in the U.S. The U.S. is more watching out for any signaling about rate hikes or rate cuts come September. Here in Japan, it will be about watching those potential reductions in debt purchases, the scope and size of it. We already heard from Governor Ueda that they could be sizable. The consensus is, though, for no change when it comes to the interest rate policy. Take a look at how we're setting up, because the Japanese yen is seeing a little bit of strength in the Asian session. This, of course, after gains in the previous week as well, although we saw a lot of more weakness earlier in the week. What we'll be watching is the implied volatility overnight for the Japanese yen at a 3-month high, which could mean big swings if we see any hawkish turn coming from the BOJ, Bank of America, saying that we could see the yen at 145 per dollar. Take a look at the Nikkei, which is now under pressure after its first session of gains in 9 sessions. So we are seeing more pressure for the topics as well, down 0.6%. The 10-year yield still above that 1% level. Take a look at the Kospi and the Kosdaq coming online. We saw gains in the previous session. The Korean won, though, a little bit of weakness against the U.S. dollar throughout the week. Risk appetite sort of waning a little bit, Heidi, because we have seen the pressure on those tech shares. And, of course, tech very important for the South Korean market, now down 0.9% for the Kospi.
Yeah, and where we go with this rotation trade really, as you say, depends on the direction that we see from these major central banks this week. But take a look at how we're shaping up, of course, when it comes to this staggered start to trading here in Sydney. We're expecting downside, if futures prove correct, of about 0.5% as we get into the part of the cash session that we're watching here. But certainly we're coming off a pretty strong lead in the previous session. We saw a gain of about 1%, I should say, with all sectors rising. But looking like we're giving back some of those gains in the early part of the session. Watching commodities in particular, we had that news flow when it comes to a deal between BHP and London to buy Philo, the Canadian copper company, for about 4.1 billion Canadian. So watching for reaction out of BHP. We're also watching that sort of minings and commodities sector a little bit more broadly there, with global commodity prices set for the worst month in just about over a year. So lots of weakness for energy metals, precious metals as well. So a lot of the miners in focus today. The Aussie dollar holding pretty steady, 65.49, consolidating in that early part of the trading session as we await for Aussie inflation data. That's going to be key when it comes to the RBA as well. Some of those earlier losses being erased from the overnight session. So watching for that second quarter CPI data on Wednesday. Certainly CBA expecting that'll be make or break for a rate hike from the RBA in August. And also taking a look at treasuries as we await the Fed, right, still set for that longest winning streak in about 3 years, a third straight monthly advance, and of course that focus on that July 31st Fed decision. For more clues on the policy path, Shery.
Yes, we wait for those central bank decisions this week. Our next guest says yen shorts are dangerous and overdone. With us now is Bob Savage, head of market strategy and insights at BNY. And great to have you with us. I mentioned earlier Bank of America's call that potentially we see a hawkish pivot from the BOJ. We could see 145 per dollar. Our question of the day today is, will the yen soar or soon after the BOJ and the Fed's rate decisions? What are your expectations?
Well, thank you for having me. I believe that the Bank of Japan is going to deliver tomorrow, and that we're going to see the yen strengthen. My call is that we're going to get to $140 yen by the year end. Much of this is going to be dependent less on the rate hike, but more on what their bond roll-off scheme really proves to be. My fear is that the market's expectations about that are a little bit too mild. My call would be that they're going to reduce the amount of bond buying from $6 trillion a month to 5, then to 4, then to 3. All of that happening by fiscal year end 2020, for 2024, basically March 30th, 2025. So my expectations are that yen positioning, that is what we've seen over the last 6 months from our client flow, is that everybody shorts the yen after these meetings, and that the Bank of Japan has consistently kind of missed the mark of expectations. I think this time is different.
And what would that mean for global markets? Because, of course, the yen is so interconnected with global markets, especially through carry trades.
That's a very good point. The carry trade unwind has been something that we've been observing for a couple of months. Our carry index is still negative. Having said that, carry isn't just about the yen, and yen volatility has really made it less of a funding anchor. Obviously, there's also the implied hedging and the positive carry that you get from that by being long JGBs or the Nikkei and then selling the yen. That unwind is obviously part of the story as well. My view about the question of the carry trade in general, though, and Japan, is that you have a long way to go before rates or the attractiveness of yen as a funder go away. So my call would be that the Bank of Japan needs to hike another 30 basis points to even get to close to that 140 target that I'm shooting for by end of year.
Does the corporate outlook, though, remain upbeat, kind of regardless of what the next direction is for the yen or the BOJ?
Yeah, that's a great question as well. The corporate makeup is not Japan is not just an export center. It has some of its own domestic demand. It's a major economy, and the idea that the yen weakness is the story that has propelled the equity market to where it is probably a little too simplified. My worry is that the yen weakness is now actually hurting consumer demand, that the cost of living adjustments and the negative spiral of inflation has to be dealt with. And I think the Bank of Japan recognizes that and is going to act. That's why, a 10 basis point hike is a pretty easy call for me to make for this meeting, and more to come.
I really liked what you characterised the situation for policymakers in China of benign neglect. Is there a sense that they're comfortable with where policy and where sort of economic trajectory is heading? Obviously, the lack of growth is not ideal, but they seem to be more focused on maintaining, limited further downside, right? What does that mean for investors that are maybe looking at this market for opportunities?
So what I mean in China is that I think time cures all ills, and that the Chinese economy is going through a great transformation. And in order to stoke consumer demand in China, you're going to have to take care of a lot of different factors. The actions that have been taken haven't really won over that consumer. Having said that, give it enough time, it will. Now, what do our customers are doing? The iFlow data is showing that positioning in China is flattish. People are a little bit below benchmarks, but they're fairly uncomfortable about that, and I would be. I think China will deliver. It just takes time. So benign neglect. Let the markets do what the markets do. Let the economy grow at a measured pace without quite as much leverage as they had during the boom times. That might be the attitude that I think I'm hearing. Is that negative for long-term investment? Probably not. Short-term, I don't think this is a place where you're going to make a lot of instant money.
That's the most calming take we've had on China in quite some time. Really appreciate your time with us, Bob. Bob Savage is the head of market strategy and insights at BMI. Let's take a look at certainly not a great deal of calm when it comes to commodities at the moment. We're on track. Broadly, global commodities on track for the worst month in just about over a year. Some downside here when it comes to the majors trading in Australia. BHP Group down by 1.5%. We did have some deal flow news. BHP in London to buy filler for about 4.1 billion Canadian dollars. This is a Canadian copper project that they're really looking at in particular. We're not seeing a great deal of positive shareholder reaction there. Fortescue also off by 8.8%. A block of their shares valued at as much as $1.3 billion US hitting the market in that Monday session. Monday night, I should say, institutional investors seeking to sell down their stake, and that variable price range of between $18.55 to $19.10 Aussie per share is what we're looking at, a representation of about 100 million shares, or about 3.2% of securities on issue. So you're seeing that reaction to the block trade in the early part of the session. More ahead on the Asia trade. This is Bloomberg.
Venezuelans are taking to the streets of the capital in protest after President Nicolás Maduro claimed victory in the elections. Maduro is also facing calls from the U.S. and several neighboring countries for a full accounting of the vote. Bloomberg's Latin America executive editor Creighton Harrison joins us live from Caracas. Creighton, so how widespread are these demonstrations, and what's the potential for them to escalate?
So we have heard and seen in some instances protests throughout the country, people taking to the streets, lots of calls for freedom, cries of fraud against the Maduro administration for the claim to have been reelected. But we are at least in Caracas here in the capital starting to see things die down a little bit. The opposition leader Maria Corina Machado did come out in a press conference and sort of told people that there's a different way to protest, that she wanted things to be more organized and to be less confrontational. And so she did call for people to come back out tomorrow, but in a more organized way, more orderly way. So it does look like there's, at least here in this city, a little bit of a sense that people are heeding that. And after a long and very tense day, we are seeing the streets empty out a little bit.
We also see international pressure and scrutiny intensifying as well. And I guess my question might be, does this make much more of a difference in terms of a lot of the sanctions and pressure that's already in place for this administration?
Yeah, it's a great question. I mean, there are so many restrictions on Venezuela's participation in the global economy already. The U.S. did loosen some restrictions on some particular oil producers so that they can do business in Venezuela. So there's one lever it has to pull. But beyond that, there's a lot Venezuela can't do already. Its bonds are allowed to sort of trade on some secondary indexes as well, which has been helpful for the bonds. So that's another thing that maybe you think the U.S. could take back if it wanted to. But a lot of these things are also helping. They're helping Venezuela, improve its economy. It's in some ways can help improve the lives of Venezuelans theoretically, and make them less likely to want to leave the country and migrate elsewhere. So there are some incentives for the U.S. and other countries to not strike back too hard against Venezuela, despite what's going on here.
Our Latin America Executive Editor Creighton Harrison there in Caracas. You can get more on your Bloomberg for more on this in terms of the latest developments. TLIV Go for commentary and analysis from our team of expert editors. Well, Prime Minister Benjamin Netanyahu says Israel will respond harshly to the attack in Golan, which killed 12 civilians, as the US urges calm to prevent a full-blown war in the Middle East. Bloomberg's Michael Heath is tracking developments for us. And what are the options here in terms of a response?
Well, yeah, I mean, first of all, they have to respond. I mean, that's sort of the way it works in the Middle East. Any restraint is not viewed as being sensible, it's viewed as weakness. So, and particularly given the devastating nature of this, I mean, 12 young people were killed. This missile went off, landed in the middle of a soccer match in the Golan Heights. So there is a definite requirement for Israel to respond. When it does it and how hard it does it is the question. I mean, some analysts, Bloomberg's been reporting as well, are saying that there's no harm in Israel actually waiting and keeping Hezbollah on tenterhooks. Some of the sites that have potentially been talked about are arms caches or infrastructure in Lebanon, or perhaps Hezbollah commanders. But they really need to calibrate it. Prime Minister Netanyahu and his government need to calibrate it so that they make their point without then triggering a response from Hezbollah. And there's local reports that Hezbollah is moving precision-guided missiles into place in order to respond to Israel if it does go overboard and things do escalate. And we have to remember these guys have been, since the Hamas attack, they've been running a low-level skirmish sort of thing that's been going on daily there, and people have already been killed. But this is the biggest attack we've seen and the worst in terms of civilian casualties. So something will happen, and then the question is, how hard does Israel go? What does Hezbollah do in response?
Mike, in the meantime, we've seen Turkey's President Erdogan escalating his rhetoric against Israel. How significant is this?
Yeah, I mean, on one hand, Shery, you'd say, well, it's just sort of talk, but it's an interesting point because Israel and Turkey were actually very close, and in recent years that's deteriorated. And Turkey hosts some Hamas officials in its territory, and it sees them as fighting a battle against an oppressor. They've actually suspended trade already. And Turkey, obviously, under the Ottoman Empire, controlled the whole region, and sort of Erdogan seems to be, he seems to sort of want to expand Turkey's presence or its status as a player. And you have to remember that they do sometimes back up their rhetoric. I mean, Turkey once shot down a Russian fighter jet, which led to all sorts of diplomatic problems with Russia as well. So they do sometimes back up what they're saying, but at this stage you wouldn't see it as much more than that. I mean, he was talking to sort of in his local town, etc., to supporters, so it might just be that he sort of spoke a bit more firmly than perhaps he intended. But you wouldn't write Turkey off at all, and there's been quite a war of words between Israel and Turkey, which again is surprising because they were once very, very close.
And as we get closer to November, there are, of course, sort of renewed concerns about external involvement.
Yes. I mean, Russia, of course, is up to its usual efforts in terms of trying to influence the US presidential campaign. I mean, how significant this is sort of debatable, but given the internet culture we live in now, the online culture, the ability to do this, to set off deep fakes or to sort of run your own propaganda lines through front people is quite easy to do. What was actually quite interesting is in our reporting it has that Russia is obviously far more sympathetic to Trump, who's less interested in Ukraine. But then you have Iran, which is wanting Trump not to win because obviously he cut off the nuclear agreement they had, which created all sorts of problems for Iran's economy. So you've actually got two allies battling each other in the US election campaign. So yeah, it's interesting times.
Bloomberg's Michael Heath there with all of the latest when it comes to very interesting times in geopolitics, as we are also watching Chinese President Xi Jinping stepping up efforts to position himself as a peacemaker for ending Russia's war in Ukraine. That's despite the U.S. and Europe accusing Beijing of propping up the Kremlin's battlefield efforts. For more, our China correspondent Minmin Lo joins us now in Hong Kong. Minmin, so tell us a little bit more about Beijing's diplomatic efforts on this front.
Yes, well, Beijing had hosted the Ukrainian foreign minister last week and then concluded that the conditions were not yet ripe for peace talks. They have now followed that up by sending its peace envoy to countries like South Africa, Indonesia and Brazil to create these right conditions for the resumption of talks. And interesting that they chose these countries which have skipped on imposing those US-led sanctions on Russia. And remember that peace conference that was held in Switzerland where Russia was not invited to, President Xi had skipped that conference because he said any effective peace conference must have both Russia and Ukraine at the table. So he's been calling for an alternative peace conference, and it looks like the current actions that they've taken is meant to lay the groundwork for such a thing. And Kyiv has mentioned their openness to attend a peace conference later this year that is hosted by a country in the global south that is where Russia is a part of as well. And so this is something to look out for. Certainly, it is part of President Xi's ambitions to try to position itself as this responsible major player that is a force for peace and alternative to the U.S. Of course, Beijing's support for Russia so far has cast a shadow over its neutrality in the war, and it's still a question whether Beijing will successfully be able to extract the sort of security guarantees that would be amenable to both parties of the war and be supported by the rest of the world as well.
A lot of diplomatic overtures being made with Italian Prime Minister Giorgia Meloni's visit, right? He met with President Xi Jinping, really trying to kind of position itself as a bridge to the rest of the EU.
Yes, so she has been trying to offer to broker better trade relations with the EU, but this comes after Italy had supported those EU tariffs on Chinese EVs, and at this point it's actually not clear how much sway Meloni actually has on the trade policy of the European Commission, because she has been sidelined after the European parliamentary elections in June. She was, kept out of closed-door negotiations for the union's top jobs. But meanwhile, though, there has been, this negotiation going on both sides trying to manage the fallout from those tariffs, with Chinese President Xi Jinping saying that he is hopeful that Italy will create a non-discriminatory environment for Chinese firms, while Meloni is calling for a more balanced trade relations. And this comes as both countries still have this annual trade of $80 billion a year that is tilted heavily in Beijing's favor. And of course, geopolitics again in focus. Meloni raising the issues of that Ukrainian war, the Gaza conflict with President Xi. She says she sees President Xi as this important interlocutor when it comes to managing global tensions, and she's really trying to portray herself as this key counterpart to President Xi now ahead of the U.S. elections, where a potential Trump administration could perhaps upend relations with the EU and also perhaps pull out support for the Ukraine war as well.
Our Bloomberg China correspondent Min Lo there with the latest. Let's take a look at our futures in Europe opening at the moment amidst all of this event risk for global investors. This is a picture as we did see stocks dipping in the previous session. Weak earnings was really the biggest driver ahead of course, the Fed meeting, the BOE meeting, the BOJ meeting as well. Euro Stoxx 50 futures looking just sort of mildly to the downside there. German DAX futures off by about 1/10% there as well. It was kind of a swings and roundabout sort of session with some earlier gains then being given up. Some strength across real estate and healthcare are the ones that we're watching, and weakness in autos and travel stocks. It is a big week when it comes to Europe. Of course, the BOE decision, that August policy decision, seen as a knife edge, but Bloomberg Economics expecting a hawkish, the hawks really to be outvoted with the start of the easing cycle with a 25 basis point cut to 5% expected. Also a lot of data for the region as well, including Euro area GDP numbers, some inflation numbers and country-specific growth numbers for the second quarter there as well. The euro versus the dollar holding pretty steady, but of course, so much of that comes down to where we see the Fed headed at its month-end meeting. More ahead on the Asia Trade. This is Bloomberg. Take a look at commodities, and we are on track when it comes to global commodity prices for the worst performance, worst month in over a year. We're seeing really a lot of cross currents pointed to the downside. Energy, metals, precious metals, even down in the month of July. This is a picture when it comes to Brent crude. We're off by with just about 0.2% there, and quite a lot of downside coming from the world's major importer when it comes to China as well. That 7-week low is where we're trading at the moment. These demand concerns for crude are really just mounting. We did lose more than 3% in the previous session when it comes to WTI there as well. When it comes to iron ore, we're seeing that downside for Fortescue with that block trade, but when it comes to the commodity itself, still quite a bit of weakness there when it comes to that China property story of about 0.7%. We do have more ahead on the Asia Trade. This is Bloomberg.
As the Bank of Japan starts its two-day meeting, we're watching the Japanese yen. Its overnight implied volatility now at the highest in 3 months. Bank of America saying that it has scope to rally to 145 per dollar if the BOJ turns hawkish. We have now seen a lot of weakness this week, but we're seeing a little bit of rebound when it comes to the yen. 153.89 is the level. We're also watching the offshore yuan. Of course, we continue to watch the really dynamics around the Chinese stock market because Beijing is now going to halt publishing daily global stock flows starting in mid-August. Really another step to obscure information about overseas funds going into and out of its sagging stock market. Liquidators in China trying to recoup at least a fraction of creditors' investments in defaulted Chinese builders. They're running into dead ends. China credit reporter Pearl Liu joins us now. And Pearl, what are some of the major challenges here?
Hi, morning. We see because a lot of those Chinese developers actually they're not like in their own willingness to get liquidated. So in some cases they're not very collaborative. So that makes a lot of disputes. For example, they will play a hardball when delivering some of the financial documents, and to find those directors is also not an easy task. And also because of all those troubles, liquidators sometimes have to get more funding to fund all those procedures, and those fundings are also very difficult to get. It's not easy to get from those Chinese developers. Meanwhile, it's also not easy to get from the creditors who already lost a lot of money in those cases.
How have these procedures kind of progressed, right? Are we getting signs of creditor payouts yet?
That's like a lot. Like the earliest liquidation order was issued like almost 2 years ago, and we see like very small progress in those liquidation procedures. Basically, we have not seen much distribution of the assets and recovery to the creditors yet.
What about funding? Is it possible to find new investors at this point for some of these firms?
As I mentioned like earlier, it's a little bit difficult for those creditors who have already lost a lot of money in these Chinese developers to fund extra. To give extra money to fund the procedure. Also, like for new investors, there are some litigation funds, but they also got their own concerns. For example, like because of the meltdown is sector-wise, it's a little bit risky at this point, and also they might want to see some like successful case to start their own fundings.
Are we expecting more to this end, more developers to be wound up?
We do see like at least 8 Chinese developers at the court currently fighting against the liquidation petition. If some of them cannot persuade the creditors and the judge that they are moving forward in the restructuring talk, we might see more getting liquidation orders.
China credit reporter Per Liu there with the latest on China's property market. Let's bring in our next guest who says identifying the next Chinese default candidate is difficult. Zerlina Zeng is head of East Asia Corporates and head of Asia Credit Strategy at CreditSights. Zerlina, great to have you with us. I mean, we're talking about some of the challenges in these liquidation proceedings and really trying to figure out who the next default candidates could be. What are you watching out for?
Yeah, overall, I think the policy backdrop has improved quite a bit over the past 6 months. You still have supply side and demand side property support measures coming out from the government. And I would say selected developers such as Country Garden, Vanke, they are trying pretty hard and aggressively selling their assets, and as if they're trying to improve the recovery of their defaulted debt. But overall, I think the bottom line is the fiscal Chinese property market is not really recovering. So we really question whether these developers are financially self-supporting or sustainable, let's say 6, 12 months or even 3 to 5 years down the road, even they manage to do a debt restructuring at this point of time.
And we saw some of those challenges when it comes to those liquidation proceedings. Tell us a little bit about the progress that we're seeing in some of these names that have already defaulted and how the restructuring process is going.
I would say the restructuring process has been very slow. There are a few options for these developers to do, and the end goal is really to reduce their debt. Some of them are going for a debt to equity swap, but in that case, at least your shares have to be trading, and you are not trading at a penny cent, that type of stocks. And the other route is you are going to sell the assets, but that means the developers need to have the willingness to sell the asset with a huge discount to their NAV. For instance, like early this year, Vanke sold their retail shopping malls in Shanghai with a huge discount, but not all developers are willing to do so. And I guess the third consideration is really their relationship with the local government, with the banks, and if there are any additional new funding they could get. So there are just many moving parts together, and because of this reason, I think overall the mainstream investors, credit investors, are not very active in distressed or to some extent high Chinese developer dollar bonds anymore.
For an investor with a higher risk appetite, if you will, are there recommendations that you might make?
I think a lot of investors are thinking about trying to get some upside from this China policy or property market beta. We think there are other ways to play this. You don't have to be in the Chinese property space. There are proxies to trade this. For instance, investors, some of them are interested in buying Hong Kong properties because the policy movement, the macro beta is there, and some of them are interested going into high-yield non-property Chinese industrial space, which has done quite well over the past 6 to 12 months. So our view is because it's so illiquid in terms of the trading, and it's so hard to figure out who's the next defaulter, what's the restructuring process, and you need to filter through a lot of news headlines. We think it might be easier if you want to play China beta to do something outside the Chinese property sector.
We had a previous guest who used the term benign neglect when it comes to policy from Beijing at the moment. Do you think policymakers at this point are comfortable to an extent to let the structural slowdown in the property sector just play itself out?
I think the policymakers are getting comfortable because if you look at the credit contagion impact, it has been very limited from the property sector. If you look at the non-property Chinese industrial sector, the spreads over the benchmark has narrowed quite a bit, and we are not seeing a systematic risk spilling over to the LGIV or banking sector, at least over the near term. So I think the policymakers have certain comfort in terms of doing a restructuring of the real economy, trying to focus on some of the new growth areas. So I think that's also because of these reasons we are not seeing additional new money flowing to the property developers or seeing the government outright bailing out the property developers. I do think policymakers, they have this certain level of comfort, but they are also mindful of some systematic risk. It's a balancing act all the time.
The plenum was disappointing. Do you have expectations when it comes to the Politburo meeting or any further kind of supportive measures, given, as we say, the status quo seemed to be, I guess, a stabilised level of deflating for the sector?
Yeah, I would say the plenum meeting, it's in line with market consensus because this is focusing on medium to long-term policies. But the Politburo meeting, I think the market as well as us are looking for certain demand-side support measures. Over the last weekends, there are certain equipment upgrade or compliance, home appliance trade-in programs that was pushed out by the central government. I think it's a good direction. It really depends on the speed of implementation and the scale of all these policies getting rolled out. So we are watching out for particularly demand side consumption support related policy measures in the upcoming Politburo meeting.
Zerlina, when it comes to the stock markets, we're now seeing that China will stop publishing daily global stock flow since mid-August. Broadly speaking, I mean, this doesn't really help confidence when it comes to the transparency of this market, does it?
No, it does not. If you recall, I think last year they also stopped reporting the youth unemployment data, citing some calibration of statistics. I think they might resume reporting this data after a period of time when the market has stabilized a little bit, and also citing the same reason of statistics recalibration. I won't be surprised, but overall, I do agree this does not help with market confidence, and this is not great for the financial transparency of the country.
Zerlina, always great to have you with us. Zerlina Zeng of CreditSights there. And as Shery mentioned, you were talking about this cessation of the publication of daily global stock flows and how this is just a further pullback from disclosure, and certainly not one that's going to be seen as particularly supportive for foreign investor interest or confidence, right? Another step to kind of obscure information about overseas funds going in and out of the stock market there. The publication of daily flows data will stop in the middle of August. We did get that hint back in April, but that has really been made explicit by China's stock exchanges a couple of days ago. We saw in May also the ending of data on intraday flows as well through the Hong Kong trading link. So this kind of, follows a lot of attempts by policymakers to try and prop up faltering confidence in local investors. We've seen this outflow of global funds for other markets, the likes of Japan as well as India as well. We saw that offloading of about $4.1 billion by overseas money managers of mainland shares in July through to Friday. That is certainly on track for the biggest monthly outflows since October. So, in addition to really a lot of the other woes facing the broader economy, and the cutting of dividend plays, for example, is another source of concern. A lot is clouding earnings for Chinese companies as well at this point. Take a look at how we're trading. We are, about 40 minutes into the start of the cash session. And unsurprisingly, we're seeing a lot of risk on the sidelines going into the 32 hours that will give us the Bank of Japan. That meeting underway, by the way. We also have the Fed. We also have the Bank of England as well. The Bank of England, economists are expecting the start to that easing cycle to 5%. Is that 25 basis point cut that's expected? But the verdict is very much out for the Fed and the BOJ and whether they'll be moving this month or in September. We're seeing broad downside for Asian stocks ahead of that slew of rate decisions. Some of the biggest laggards seen here in the commodities sector here in Australia. And of course, we've seen broad-based weakness for metals, for precious metals, for commodities, and oil as well, which, the Venezuela story, Shery, is certainly part of that volatility.
Yeah, we continue to watch the latest developments there. We've now heard from Nicolás Maduro speaking on state TV, saying that Venezuelan authorities have, quote, captured many protesters, that most Venezuela protesters are criminals and paid to protest is his allegation, speaking to state TV, saying that the protesters are following opposition instructions and that they will be severely charged, according to Nicolás Maduro speaking on state TV. Of course, there's been a lot of questions surrounding the recent elections in Venezuela after the Electoral Council certified Nicolás Maduro as the president-elect. But we've seen protests erupting across Caracas, and the opposition leader, Maria Corina Machado, has been named a key suspect in investigations of alleged electoral sabotage in Sunday's presidential vote. We're following the latest developments. We have heard that the protests have died down across Caracas, but Nicolás Maduro now saying that the protesters will be severely charged. This is Bloomberg. We're watching the banking sector across Japan. Of course, it's the first day of the BOJ policy meeting. We are seeing the 10-year JGB yield still holding at around that 1% level. Banks on the topics down 1.5% as we're awaiting the first quarter earning results for Nomura Holdings. The expectation is for profit to have jumped by more than double from a year earlier, led by domestic retail brokerage and the wholesale businesses as well. Now, the Norinchukin Agricultural Bank in Japan is not listed, but just keep an eye on this company because they will give us a first glimpse into how it's unwinding $65 billion worth of unprofitable sovereign debt holdings. And the reason that we care about this bank is, of course, because they made some wrong bets when it comes to interest rates globally. Investors also awaiting Standard Chartered earnings out later Tuesday. Analysts at Jefferies and Morgan Stanley expect the bank to announce a $1 billion share buyback. Let's get more from our Asia finance reporter, Denise Wee. Denise, so what should we be watching out for in these numbers?
So Standard Chartered today is due to report about $1.6 billion pre-tax profit. What we're looking for basically is the bank has been trying to streamline its business, make things more efficient. Earlier this year, they announced a cost-cutting measure called Fit for Growth. So we'll be looking out for more details on this. The bank has already identified about 200 projects. But what exactly they're planning to do remains to be seen. Also, there's been a bit of a management reshuffle earlier this year. They've created a corporate investment bank. So that's created a bit of movement. They may not talk about it during the earnings, but it's certainly something that people will be looking out for. The other thing to look out for is bad loans. Generally, Standard Chartered has stabilize its China real estate issues. Bad loans have sort of stabilized. But at the same time, they took an impairment against Bank of Bohai last year, and Bank of Bohai recently announced it's going to auction about $3.5 billion of bad loans. So investors will be looking out to see if there's any follow-through to the earnings. And I guess finally, basically the business. Loan growth has been quite weak. We're looking to an interest rate environment that's looking to fall. So I think loan growth, there'll be weakness in those revenues. But at the same time, the wealth business will be doing well.
Net interest income, though, is likely to affect not just Standard Chartered, but we're also looking at HSBC as well. What's the biggest impact here to be seen?
I think the biggest impact is we're just heading into an interest rate cycle that's going down, and all the banks sort of grappling in how to deal with this because it will make it harder to grow your revenues. So a lot of them are looking at non-interest rate sensitive income, such as fee revenues from the wealth business. So that's basically where they're pushing quite hard, and we've seen quite strong inflows in Hong Kong lately.
And what can we expect on more cost savings for the bank?
Do you mean for Standard Chartered?
Yeah, Standard Chartered.
I think they've worked quite hard to simplify the business. They've reduced different management layers. They rejigged the structure. We potentially job cuts are one way. That's one way they can do it. And they have been cutting jobs over the last few quarters. As you know, investment banking revenues remain quite weak. So I think that's one way. The other way is maybe through technology. That's something they've talked about, using more technology to make things more efficient, reducing overlap between certain areas. I think those are all ways that the bank can look at.
Our Asia Finance reporter Denise Wee there will be speaking exclusively with the Standard Chartered CEO, Bill Winters, after those results are released. That conversation coming up at 1:30 p.m. Hong Kong time. Let's get you caught up with the latest on the corporate front. And Singapore's Temasek is planning to invest $30 billion in the US market over the next 5 years, with North America remaining its largest recipient of capital. The state-owned fund told Bloomberg it's also looking to invest in AI-related firms, plus semiconductor and infrastructure plays. Temasek's investments for North and South America surpassed that of China this year for the first time in at least a decade. McDonald's had shrugged off the burger chain's first sales drop in 4 years, pledging to launch new promotions. Second quarter comparable sales fell 1% year-on-year, with CEO Ian Borden warning of further weakness as cash-strapped consumers curb spending. But investors retained their appetites, shares posting their biggest daily gain since 2022. Energy trader Vitol Group paid a record dividend of $6.5 billion last year after Russia's invasion of Ukraine delivered a profit boom. The payout represents an average of $14 million for each of the 450 employees who own the company. Bloomberg calculates that Vitol has distributed more than $25 billion to its partners over the past 15 years.
And we do have an alert on the Bloomberg right now. We're seeing more reaction from the international community when it comes to the Venezuela elections. Now, Peru says that Venezuela diplomats have to leave their country within 72 hours, expelling Venezuelan diplomats, according to the foreign ministry. Of course, Peru was one of the countries alongside Brazil, Chile, and Colombia. Really, these regional peers demanding to see proof of Nicolas Maduro's victory in the Sunday election. Panama also announcing a temporary suspension of ties with the Caracas regime. So we're seeing lots of questions by the international community when it comes to the election of Nicolas Maduro and the Electoral Council certifying the president as a president-elect again. We will continue to watch the developments around the Venezuela elections, as we've heard from Nicolas Maduro himself saying that authorities have captured many of those protesters that took to the streets after the vote. We have more ahead on the Asia Trade. This is Bloomberg. You're watching the Asia Trade. Some of these corporate stores that we're following at this hour. Heineken shares slumping in Amsterdam after the beer maker took a $949 million impairment on its stake in China's largest brewer. It says the value of its stake in China Resources Beer tumbled on concerns about consumer demand in Asia's biggest economy. Similar weakness in the U.S. and Europe saw the brewer narrow its forecast for full-year profit growth.
The impairment that we had to take, a non-cash impairment, is a technical adjustment that we have to do because as a minority participation, we need to value this on the share price, and the share price of CRB listed in Hong Kong dropped below the level that we acquired the company.
Disney's Deadpool and Wolverine has clocked the biggest box office opening of the year. It took in $211 million in North America during its opening weekend in cinemas, but it couldn't clinch top spot in China, beaten by a local comedy successor, underscoring really the challenges Hollywood studios will face in China, which was once a gold mine for U.S. releases. But Haidi, I can't wait to watch this movie. They're two of my favorite superhero characters.
And I have to say, the promotional tour, the interviews, the back and forth, the love-hate relationship, it's been kind of a publicity masterclass, right, between Hugh Jackman and his co-stars. But taking a look at how futures are trading going into the start of what is looking like a down session for China. This is Bloomberg.